All right, well, good morning, active traders, and welcome to our Trading Week Ahead broadcast for today, Saturday, May the 1st, 2021. It's great to see so many of you here. Hope that you're having a great weekend and a great week, trading week last week, and I hope that you're having the start of a good trading weekend here as we get underway. Where earnings season has been met by a lot of market. The traders have sold off Apple and Amazon and some of the large cap techs despite spectacular earnings. And so that's kind of a red flag for the market. So you want to be cautious for longs next week for any swing trades. Day trades have at it, right? Any new breakouts make sense. But strategically, because the market is slowing down here a little bit despite great earnings, that's a red flag. The other red flag is the fact that the VIX has been bouncing here a little bit, right? Our volatility index is coming up off its lows near 15 and getting back to that magic 20 spot. Remember, as I mentioned to you folks last week, remember, always keep a keen eye on the VIX at 20. And if the VIX stays under 20, we still have a long market. But if the VIX pops over 20, which it's on track to do here, we want to not be long the market, or you want to take profits, or at least tighten up trailing stops on all exits, okay? So we'll take a look at some charts here coming right up. We're going to start off with a few swing trading charts. In fact, I'm going to start off with charts that you folks picked because they're spectacular. A few minutes ago, I'd asked traders to mention swing trading charts they were following, and I'll give you a heads up on those. These are two really good ones. NUE, I like the fact that it ran all the way up to 84 from 48 or 50, and it's got a really good continuous move to the upside. So NUE. Looks good north of 84. Okay, the other really good chart that one of you good folks had mentioned is ALLY. That's a spectacular trending chart, right? Now, one thing that you want to do is look for scaling in potential as well. So if we buy over 52, I would scale in again over, say, 54, maybe 56 and 58 and 60. So whenever you, because think about the difference in the money that you would have made trading this if you had traded just, say, I don't know, let's say 100 shares. Let's keep the math easy. Let's say you bought 100 shares at 34. Well, now you're up 15 points, and that's great. You're up $1,500. But if you'd scaled in another 100 on another breakout, another 100 on another breakout, you could have multiplied your profits. And so one of the things that I teach in my live room and also here with you folks is to make sure that you always advocate for yourself to scale in or buy more shares if it keeps going up. And the way you do that, I explained in the live room for day and swing trades, but you want to wait at least every 2 or 3 days. Always remember, space out when you add to a winning trade at least 2 or 3 days apart, because often you get a big up day and then it's followed by what? A down day or choppy day. You don't want to scale in the day after you got into an initial position. You want to wait at least 2 days apart. So anyway, this is a good chart. Let's do a quick technical activity. If you buy this over 52, and I'll hit this guy over 52. It's a great chart, right? Who knows where it ends? If we buy over 52, where would you put your initial trailing stop, or your initial hard stop, I should say? Let's say we buy this guy ALLY at, say, 52.3. Or just do 100 shares or something. Where would you or put your initial hard stop? Go ahead, and this is the audience participation portion of this morning's event. Type in a number. About what dollar figure, just eyeball in the chart, would you set your initial stop? Go ahead and hit me with your best shot. 17 under 50, 50, 49, 8, 50, 30, 50, 40, 50, 50.2, 49, 7, 49, 8, 50 even, 50, 46. See, 48, 50.1, under 50. Personally, I would use 50 as the line in the sand. That's the price that would prove a breakout trade wrong. So, and it's a nice decade value. Remember, one of the things that I teach, and it's been extremely popular with so many tens of thousands of traders, is buying within whole number ranges for day trades. Say we buy at $11.20 and we sell right under the 12, right? We'll look at some chart examples in a minute for day trades. And for swing trading, trading within the multiple of 10 value. So if we buy right over 50, say 52, we'd be happy if it goes up to 60, right? And that would be a good round trip for a swing trade. Buy 52, sell 59, sell 60. So the price that proves that wrong is, the setup is, you go long at some point within the first couple of points above a multiple of 10. So we buy 52, but we stop out if it gets right under 50. We scale in, let's say we buy 52, we scale in over, say, 54, and you build the trade from there. You want to use very simple price action patterns that make sense. So good answers, appreciate it. A couple to follow up with for you folks that I had mentioned a few weeks ago. Yum Brands, fast food giant, looks fantastic. I had mentioned it to you guys about a month ago, right? Back in early April, I said Yum would be a play over the 112. Now it's up to 120, and that's great. Now, if we buy over 120, where would we put our stop? 118. Where would be our exit target? The high 120s, like 127, 128. So if we buy 120, just over the 120, I'd be happy if it goes up to like 128 and I sell up there for an $8 win per share, right? So that's the kind of chart that you want. This also illustrates what I call an acceleration ramp type chart. We had a previous trend up, and then it hockey sticks to a 45-degree angle breakout, which is always the best type of a breakout. It shows consistent relative strength. Yum Brands looks great. Also good reopening plays. People get out of the house and go to fast food. Now we're facing a severe shortage in commodities, everything from plastic to chlorine to lumber to steel to copper, like FCX is the ticker for. So with the reopening, reflation trades, and our infrastructure building, things like lumber and copper and steel, your metals and raw materials are a good place. And so the surrogate for, instead of trading commodities on the commodity market, we want to trade stocks of things like the miners that mine the metals. So Freeport's really good and has been for a long time an outstanding swing trade. And last but not least, our cannabis stocks are my favorite pivot play swing trade. We're gonna look at day trades in just a minute. So, but I don't know, is anyone else? I'm in Tilray. I'm in a lot of the pot stocks I've been buying last week. Tilray, Aurora Cannabis, APHA, MJ, CRON, Canopy Growth. A lot of the cannabis stocks did a big sweep up. They came back down to support. Now they're at a key support level. And if they start to light up, you may want to look at some of the cannabis plays as well. So the signals to look for to tell you whether or not to go aggressive, long, or short the market. The most important one is VIX at 20. What does VIX do? Does it break over and hold over 20? That's going to be a key resistance area in the VIX. And in the market, if it breaks 20 and goes up, you want to be out of stocks and into the inverse ETFs, you know, like VXX or UVXY or SQQQ. The other play is if we do get a breakout in the S&P and we break north of, in the S&P, I'd be using the $50 marks as key support resistance. I'd be using 4150 support, 4250 resistance. So our S&P has been in a spectacular uptrend, but because of a relatively, I won't say totally negative, but a so what response to earnings from our MAGA stocks last week, our large cap tech, that's a warning sign that things may be in for a pullback or a slowdown or a consolidation next week as well. Now let's take a look at some day trading charts. Well, by the way, too, just a reminder, if you're not yet a live room member, if at no other time in your life you joined, this next week might be a good time to try my Trading Open live room, popular with traders since the year 2000. I've been running this room for 20 years, tens of thousands of traders trained. And I run it like a live seminar event, as well as with specific entries and exits identified ahead of time for the best charts each morning. And a really good teamwork, and we have a good time too. So it's like to give you some good thoughts for both day and swing trading. I now cover swing trading charts in the live room, unlike how I'd run it for most of 20 years, which is all day trading. Now we cover swing trading charts daily as well as our intraday charts. So if you're not yet a live room member, do try it out at Trading the Open. The link is trademastery.com/live. Anyway, back to our charts. Take a look at this BTX chart. This is a biotech medical chart. It ran all the way to 66 after market, right? That's the official market. So it ran in the morning from 31 to just under 60. And again, notice please how it stalled at 60. Every time you see a multiple of 10 value on any chart, that's a sell target would be the 9 right under the decade. So anyway, if you traded this one, I don't know if anyone was trading BTX yesterday, but a huge runner. And we're going to follow this one next week in the live room. So excited to be able to bring coverage of this to you next week as well. Some of our charts that we covered successfully yesterday for our members included Carnival Cruise Lines. I called it long, I think it was 27.20, something like that. Let me take a look. And these are our tickers. Yeah, 27.20. I got our traders in at 27.20 and out at 27.7. So when it was down here before the bounce, I said we go long at 27.20. And again, this is an exclusive answer key. This answer key that you're seeing up there is one of the big featured benefits of my live trading room, because I identify, unlike virtually everyone else who just randomly talks about a watch list and it's going up, maybe you want to trade it. That's not nearly as valuable as my approach, which is to give specific entries before they get there. And even more valuable is a very specific exits. Like when it runs up, I say, okay, we want to trail a stop at, say, 27.7 to lock in a gain. Now, oftentimes as a day trader, there's few things that are more disappointing than to get into a winning trade that goes in your favor, and then you get overly optimistic and think it's going to keep running, but it doesn't, and it comes back down to what you got in at. And then you have a break-even trade or even a stop loss. I endeavor to try and teach traders how to instead lock in a gain by using a trailing stop as something runs up in our favor so that you don't get back profit. And this is a really good example. Yesterday morning, for those of you who are trading Carnival, we had a move up, and my calls were perfect, or near perfect, 27.20 in, 27.7 out, before it sold right back down to near 27.20, right? So it doesn't do you much good if you buy here and sell there, right? Our call was to buy there, and in real time when it was up here, I said, trail a stop at 27.7. This illustrates also another concept, my whole number strategy. Just in the back of your eye, whenever in the back of your mind, in your trader's eyes, as you're looking at the charts, if something runs up to near a whole number, you want to tighten up a trailing stop to lock in a gain, because frequently things don't break over the whole number, and that is it for the day, right? And that was the case for Carnival yesterday. So you may have seen my article. This was back when Twitter was, I think, 30 a share or something in Stocks and Commodities magazine. Technical analysis of stocks and commodities. Had a good article where I covered an example of this strategy where you go in right above a whole number and then sell right underneath the nearest whole number. And that's really smart for day trade. So anyway, Carnival was a good winner for you guys yesterday. And again, this answer key is found exclusively, updated daily in my live room. And it's a really good feature, a really good benefit that no one else offers. The reason is the other people aren't any good at day trading. That's why they run rooms instead of trade. For the most part, I think they're not good enough to give squawks. I give like a Wall Street style squawk box service. So you're getting live squawks. Hey, it's going to break out here. Let's go long if it breaks, this price right above where it's currently at. And then once it's in the money, we tighten up we say, okay, sell it if it gets back down under here. And I walk you through step by step. Or for things that don't work out, let's say it starts to run up and I say trail a stop at break even and it comes back down, we're cash. Or if it goes against us, we use really tight stops. So I like to play things safe, and specifically with alerts that make sense. Mara was a good play. Now I called it late for the breakout. My long trigger on this guy was 30, when it's here, it was running. I said, okay, we'll go long if it breaks 36.40. That's good. And the exit was here at 37.60 on the pullback. Again, before the epic reflation or the parabolic drop back down to support. And that's a skill that takes a lot of time and effort to learn. It's like playing a musical note. I play tenor sax. I was playing day before yesterday. I like to play jazz and blues. Anyway, you hold a note but so long. You don't hold it longer than it's supposed to be. You don't play it shorter than it's supposed to be. You got to be just right. And as a trader, knowing how long to play the note or how long to hold your trade before the price action starts to go back against you and hold it long enough to make a reasonably good profit is an important skill to learn. So anyway, Mara was a good play yesterday. I think VXRT was a stop. I think we did have a stop loss. Fortunately, they're extremely rare, but the VXRT did break the 20 and it pulled back down. So we did have a stop, but most of the calls are usually winners. So and again, they're all for paper trading. So you learn in a safe, intelligent learning environment. NEO is also a good runner that I mentioned to my members. The pattern on this one, again, become pattern day traders. The pattern is a recovery on a gap down of the prior day's low. It's critically important to your potential success as an active trader that you're keenly aware of not only the average trading range, average true range or average trading range, but also the previous day's support and resistance levels. And in this case, you can see NEO made a bullish cup and it recovered above the previous day's low, which is why it was a good inside range breakout over 39 whole number. I ran all the way up to 41 whole number. So we had a 2-point run in NIO yesterday from 39 to 41 inside the previous day's range once it broke resistance here. Previous support became new resistance. That's a concept my colleague Steve Nissen from candlecharts.com calls a change in polarity. And it's a brilliant strategy, right? Previous support became new resistance. The long trigger is above that. My secret sauce is I wait for it to break above a whole number. I don't buy right under whole numbers because I know they self-install if you do that. So a long trigger above a whole number makes sense. Another good play. Another good chart yesterday. It's an infrastructure play, US Steel, X the ticker. My three favorite metals stocks are X, CLF, and FCX. Two are steel, X and CLF. Those are steel metal plays like this chart. And FCX is copper, Freeport-McMoRan. Anyway, the X chart ran nicely, right? From, again, here's Calhoun's whole number strategy again. We got to break out above the whole number 22. So if you went long there, you could buy there and sell there, and that's fine. You could also play that same strategy above 23, say buying 23.20 and selling right under the nearest whole number, 24. So again, if you get in a trade right over, say 20 cents above a whole number, it's smart to sell it or at least tighten up a stop once it breaks 70 or 80 cents, the 70 or 80 cent mark. So this guy ran 23 up to 23.80. That was a good exit. And that also confirmed that prior high, which is a whole number, a dime under a whole number. So I'm the exclusive guy that teaches this whole number strategy, along with tape reading and price action entries and exits live in real time each day. And it'd be great to see you guys as members of the live room for any of you who aren't. Wow, big turnout today. Good to see such another epic turnout. What, 6,452 people have registered for these things. So I'm very popular, just under 6,500. Again, for more details on the live room, you can go to trademastery.com/live, or just remember, type in tradingtheopen.com. I used to run a separate site for the live room, but I decided to simplify and put it in my main site. So you can still type tradingtheopen.com, and I set it up so that it forwards you over to this page. So That's where you can sign up. That's where the magic happens 5 days a week. And teamwork and intelligent, thoughtful entries and exits. Invis, I called along at 14.7 and it ran all the way to 16. So that was a good pivot play in MVIS. Biggest range chart was BTX, Bravo Tango X-Ray. You can see it ran after market in the tape. You can see there $66.12, and that's where it traded as high yesterday afternoon after the market closed. It skyrocketed from whatever 49.80 up to 60, so a $10 run. So the current price is way up in the sky. Now, do you think this would be a smart chart to swing trade? The answer is no. Yeah, I never swing trade something with this big of a range because that'll just bite you in the butt. Usually you'll buy it and then it'll drop like 10 points against you. That's an epic fail. You don't want to do that. So some charts like this are ideal for intraday trades, but really not safe or risk. The risk is too high for swing trades. You can do a 50% mean reversion gap against you on a follow-up day and put you deep in the red. So this one put anyone who traded it on the way up deep in the green, which is great, but we want to be safe about our things. Now, what if the market sells off next week? Surprisingly, the semiconductor inverse SOXS was the strongest one yesterday, up almost 4 percentage points. With the chip shortage, global chip shortage, you would think that would lead to increased pricing in the semiconductor sector. But anyway, the SOXs ETF is up. Our VIX ETNs like UVXY and VXX also breaking the 2-day highs, or did do a 2-day high breakout. And my other favorite is TZA, or Russell Small Cap Inverse Bear Leveraged ETF. And TZA ran from 29 on Thursday up to 32 yesterday. So, and the thing I like about these is they've got lots and lots of upside left in case the market drops. So you may want to keep some of these on the radar. And I do issue alerts for these live in the room daily as well. Yeah, Soxus has a good run. Yeah, thanks, traders. Let's see. Oh, wow, a lot of questions. Yeah, we looked at the S&P. A question from a trader: how much capital do I need to start for trading in the live room? None, because I forbid anyone to trade live per regulatory compliance regulation. So you pay per trade. I like Interactive Brokers Traders Workstations, a really good demo account platform. So you don't need any capital and are not allowed to trade live capital per compliance regulations. And I mean that too. I want you guys to learn. All information is for educational use only. So you don't need any capital at all to trade. You learn by practicing the entries and exits. And the goal is to help transfer the knowledge of both the wins and the near misses and the occasional rare stops, but a lot of winners each day. I want you to learn, kind of develop a pattern memory, kind of develop the skill set, kind of like working out and getting your muscles in good shape, right? You want to exercise your pattern recognition skills and your timing skills so you can see round trips the way they're supposed to be. The other good thing about my day trading approach is, unlike other people, I don't advocate scalping inside of 1 or 2 minute ultra fast time frames because nobody can follow that. I like round trips of like 10 minutes, 15, 20 minutes at the slowest usually. You know, as long as half an hour, but we like day trades that last usually a minimum of 8 to 10 minutes or longer. So we don't scalp inside of 2 or 3 minutes. That's a dangerous, difficult, and I believe unsuccessful way to day trade. I prefer charts that have really good directional momentum, like this Mara chart, right? I called it long at 36.40, or Carnival Cruise Lines. I called it at 37.20. I'm sorry, 27.20. Now, why did I call it a 27.20? Well, look at the previous day's chart. This gave me 2 technical signals to give my members, right? There are 2 reasons. Yesterday, that was right. It's right above yesterday's close/low. Which is also, not coincidentally, right near a whole number. the 27. So going long right here, that's a perfect, what we call an inflection point or a reversal, a pivot play. Is if something runs down under the previous day's low and then recovers into the trading range, it's usually a good play for up to around 50%, which this one almost did. Mean reversion pivot back up into the previous day's range. So for those of you who play pivots, there's quite a few things to learn how to do those the right way. I've done tens of thousands of trades, millions of dollars a year, as much as 4.9 million worth of order flow in a single year years ago. So I've got lots of experience under my belt of live real trades, unlike other educators, most of who just talk about things but don't really trade. I've shown ample P&L proof of my trades, and one of the things that I encourage you to do is learn these patterns with me. I mean, the point is, it got above the previous day's low / close, and that was right in the low part of a whole number, right near the slightly above the whole number 27. So that made perfect sense to long call. The more impressive part of, I mean, the entry was great, and that's important to get, but the exit is more important. Exits are more important than entries, and they're counterintuitively, but I called it to sell at 27.7. Made for a good 50-cent round trip, which is good, right? Good bounce. Hey, CLF not breaking out yet. I haven't traded CCO Bill, but worth a shot or worth a look at. I like FCX for copper. It's a question, how does the first day of the month usually trade? There's no consistent pattern based on the day of month. Things like earnings release and options expiration dates have more impact, and economic releases and the Fed meetings and all that kind of stuff from external factors than things like the day of week and whatnot. All right, let's see, AZEK, let's take a look. AZEK. And for answers as to where exactly I would buy things, Wendy, join the room and I'll give you those answers. Let's take a look here. It's just okay. I like the range, but I don't like the lack of consistency. So myself, when I'm looking for charts, I'm looking for things that don't have major pullbacks. Charts with major pullbacks should be seen as like people with major character flaws or addictions or problems or whatnot. Sympathize with it, but don't trade it. So, you know, I like charts that look like a piece of string that's been tied tight. Like one of you had mentioned earlier, this chart. That looks brilliant. The risk is much lower, in my humble opinion, on charts that have consistent trends without the depth of pullbacks. Anything that has big swoopy up and downs, don't trade it. It's like hiring an employee that's late to work all the time and doesn't know what they're doing. So for that reason, this chart is crap. Somebody had asked about Moderna, the same problem. Anything that has been plagued with recent selling as well as buying is a horrible chart to trade because nobody on Wall Street has confidence in it. They'll buy support, sell resistance. So you might want to go for a channeling, you know, play within a big channel, but that's why go through that much trouble when you can trade consistent charts instead. Micron's been flat since the start of the year, pretty much. A lot of the semiconductors and large cap tech growth stocks have been flat since the start of the year because they're already many times forward earnings growth priced into the stock. So what we're looking for, like one of you had mentioned this chart, that's one with evidence of consistent buying month after month. That makes much more sense. So good charts. Hey, Harvey, let's see, do I use Fibonacci pullbacks? No. I use the 50% retracement, which is a Fibbo level, but I don't use the others because they're not consistent. I'm a former corporate statistician at Ford Motor Company. I've got extensive numbers background, and I test things consistently. What we're looking for is large, strong trends that are easy to trade. Getting into things like Fibonacci levels is kind of like second guessing where's it going to bounce. It's kind of like wave theory, epic fail. Well, some of wave theory is not bad, but for the most part, you want charts that have really big stretched ranges And then if you're going to trade a pivot, you want a really big range down to the 50% that then starts to bounce. Something like Tilray, for example. It ran all the way from 10 to 60. Now it's back down here to just around 20. We'll see if it breaks north of the moving average lines here. But, you know, all things considered, I really prefer charts that have good directional consistency, like ALLY. For swing trades, especially valuable. You want charts that don't show any ups and downs. So does that make sense? Something like this over Moderna or some of the other charts that some people have mentioned. Any chart that has big swoops up and down that looks like the letter W or something should be avoided. What you want is something that has a nice clean directional run that's straight in a row, right? Something that looks like this, not something that swoops up and down. So anyway, good stuff. Thank you so much for being here. I think we're going to wrap up here soon. We're just about at our half-hour mark. So thanks so much to all of you for being there. I hope that it gives you some food for thought in the next week. And if I've earned your trust or piqued your curiosity, you may want to try my live room. You have my word, and it's money back guarantee on the trial, so you can try it risk-free and give it a couple weeks and see if it matches Echo Stop. Echo, thank you. It's not going to talk. Anyway, I hope that it gives you some good food for thought and charts that make sense to trade. And a very much a rules-based, very risk-averse, very conservative approach using it starts off with the best charts in mind, right? The best charts, the best laid plans, and then we manage our entries and exits from there. So I'll see you in the live room. Try it out. Next week will likely be a highly volatile week. It's towards the tail end of earnings season, and if the market sells off, I've got a lot of expertise and experience trading the inverse instruments as well as the long plays, and we'll look at which ones make sense next week. So thanks for being here. Appreciate it. Hey, thanks, Simon. Appreciate it, man. Hey, thanks, Margaret. Thanks, Winnie. Thanks, folks. Hey, thanks, Bill. All right, take care. I'll see you guys next week. Thanks for being here.